Hi, Seekers of Wisdom. Welcome to another episode of Chronicles of 1900. My name is Ibrahim Sunday, and it's another opportunity to tell you about something that is happening in the UK. I'm not sure if you're aware, there's a lot of conversations going on right now about inheritance tax and what is going to happen to your property when you die, what's going to happen to your children inheriting your property. For so many of us that might have bought one or two houses, especially if you're aging towards retirement. And also, if you're just going to get into the property, it's something to consider before you buy your first property. Now, the inheritance tax at the moment stays at 40%, which means if you die and you have a house of probably real estate of £1 million, the first 325 to 345,000 is tax-free. And then the remaining maybe 625 or thereabout, that's going to be 675 now because you have 325,000 tax-free. So the remaining 675,000 is going to be taxed at 40%. So you see the farmers at the moment, they are all complaining about this, and there's a lot of issues around how this works and everything. So the question is, what can you do about this if you're going to go into real estate? So many of us, we might be buying our first house, our second house, or our third house. What are you going to do to ensure that this level of tax doesn't come into your coffin when it gets to that level? There's also a rule of thumb that if you die, this inheritance tax is payable by your children. But there's also a bit of succor, I'll call it, that you can actually begin to move those properties to your children before you die. And this is where the video for today comes in. It's about having your property in a trust. So if you have it in a trust and you have your children in the trust, what happens is that you make them beneficiary of the real estate. Now, what big real estate owners and companies are doing right now within the last few months before the new law on tax policy kicks in next year is they are beginning to assign much of their properties to their children. Now, there's a concern on that. Example, if you've got children that may be 18, 19, or 21, and you feel like if you assign to them all these properties at this point in time, they might not manage it properly. But the problem again is if you don't assign it to them and you die, then they will pay this 40% tax. So the question is, what do you do? What about if you don't even have any trust in place and you buy your property on your name or on your wife's name and something happens to you and your entire real estate needs to be taxed at that rate? Then there's a concern of how that money is going to come out. The major concern that farmers are having at the moment is how will their children pay those tax and not forfeit the business that they have built over the years, generational wealth. Now, this is my suggestion. Have a trust in place. Put your properties in the trust. Put your children as beneficiary. And if you are approaching the age where you feel like maybe you're going to 70, 80, right, begin to assign those properties to them as the trustee, right, that will be able to hold the properties. As a result, if you die, you don't really need to go through the inheritance tax, or your children don't need to go through it, because at that point in time, they actually have the power to be able to run the trust. But if you don't, or you haven't bought a house yet, which is where I'm coming from, why don't you think about beginning to buy a house in a trust? Why don't you think about buying the property as a business and adding your family into the business as beneficiaries? The good thing is this: if the business owns the house, or the trust, if I put it like that, owns the property or the entire real estate, and you already have beneficiaries on it, there's actually less pressure on you to be able to begin to think about what happens if you die. Another thing again is having your house in a trust. You can actually have the flexibility to have more properties in that trust, and you can also pass on that real estate to your family members that are already members of the trustee. Okay, what I'm saying to you is some of the things that a lot of people have made mistake on. They bought properties. I have a friend which I spoke to, and right now the wife has 11 properties on her name. 11 properties on her name. So the problem is, how do they bring all this together? one of the concerns they have at the moment is that they can't even sell the property on a name to their business, because you can't just transfer it. You need to go through normal channel of selling the property to the limited company, and then you need to pay your normal capital gain tax on that property that you're selling to your own limited company. You also need to understand that when you are selling the business, selling to the business your own property, which you own the business as well, you still have to pay stamp duty. So your company, your limited company, still have to pay stamp duty on that property that you are selling to your company, simply because you have made a mistake in buying the property in your personal name instead of the limited company's name. So what I'm saying to you now is, before you even think about buying the first house, ask yourself the question: should I be buying it on my name, or should I be buying it with the company? If you're buying it, should I be putting this in a trust at the moment? If you're buying as sole ownership or shared ownership, what is the best advice you could get? I'm not a financial advisor, but I'm telling you, based on the regulations, you should start talking to a financial advisor. You should start talking to a broker. You should start talking to a financial expert that will help you structure your investment to ensure that you are not making costly mistakes. This, my friend, I'm talking about now. Imagine having 11 properties on your name that you are actually running, but it's difficult because you have to declare self-assessment for all the income from that 11 property every year, right? There's a limit to expenses you can claim on it, which you could have done on limited company easily. And then if you try to sell anyone at the moment, you have to pay capital gain tax on them. So the question is, would you want to make that mistake of buying 10, 11 properties on your name before you realize that you could have done it better? Please, this video is to enlighten you, to tell you to read more about it. I'm going to drop into the video the link to from the gov.uk that talks about inheritance tax and also capital gain tax as well. Think about it before you buy your first property. If you need advice or you need help, reach out to me. I can tell you one thing or the other. I can even signpost you to some investment bankers and investment brokers that can tell you how to do and what to do about it. I hope this video has blessed you. My name is Abraham Sunday. It's Chronicles of 1900, an inspirational podcast to begin to enlighten you and ensure that you take the right steps. Don't make the mistakes some of us have made, because if you make those mistakes, at the end of the day, you're going to go through the pain that we have to go through as well. I hope you don't want to go through that. Okay, that's why we are here. Remember, like, share, comment, and remember again, it's Chronicles of 1900, an inspirational podcast. Until I see you again next week, remain blessed.